What's good, everybody? It's your boy Train the Trader. Look, I got something for y'all today. I got some gems for y'all today. I'm going to help you take some emotion out of your trading by focusing on some basic candlestick patterns and some indicators that are going to help you win. All right? So the key is take the emotion out. Why do we want to take the emotion out? Because emotion gets in the way of making money in the market. You got to take emotion out of your trades if you want to be successful. So that way you can stick to what you know, what you see, what the charts are telling you. Man, let's get into it. I'm excited about this video. Get your pen, get your paper, lock in. We got a good one, folks. Let's go. What's good, people? It's your boy Train the Trader. What up, though? What up with it? Let's go. Today's a good one, folks. So this one came from a member in the Discord. I had dropped a chart similar to this one that you see on the screen in the Discord, and they couldn't understand it. So like, just do a video, break it down, help us understand. I got you. So this is what I want to talk about today. I'm going to present you guys, as you see, with some basic candlestick patterns. We're going to focus on the elephant candle, the tail candles, or top and bottoms, and bull 180s, as well as the 20 SMA and the 200 SMA. Now, if you follow my channel, you've seen some videos like this, not together, but I got a new concept that I want to kind of bring to the table. And if you don't know what I'm talking about, go check out my other videos where I'm talking about candlestick patterns and the SMAs, the 20 and the 200. Okay. All right, let's lock in. If you got a pen and paper, great. If you're going to screenshot, even better. But if you don't pick up the concepts, don't worry, because I got screenshots. I'm going to show you guys examples, and then we'll kind of go around the charts and see if we can't find some patterns. But I don't want to just aimlessly be on charts all day trying to find these things. So I took some screenshots to help. But pay attention to this stuff. Take screenshots, draw them, write them, take notes, whatever you got to do. This is super important and is going to help you, I promise, if you're day trading. If you're into trading long term, not so much. This is more for day traders, swing traders, things like that. But these keys are super important, and let's get into it. So the first thing we got up here is the bull elephant candle and the bear elephant candle. Really easy to spot on the chart. You have a green candle, in this case the bull elephant candle, where the green candle is taking out previous red candles, but it's a convincingly larger candle than the previous candles. Okay, so you'll see it come in like this, boom, big green candle, or the bear elephant candle, which is a big red candle. So it's a significantly larger candle than its counterparts, I'd say within like the previous 5 to 7 candles prior to that big candle. That's what you want to pay attention to. And again, I'm going to show you guys examples, so don't get caught up on that. All right, next we got the bottom tail candle. So it's going to have a big wick at the bottom. And this can be confused with dojis, but dojis normally don't have such a big body on them. The main thing you're looking for is how long the tail, the wick is. Whether it's on the bottom, it's called a bottom tail, or the top, called a topping tail or a top tail candle. The bottoming tail is bullish. It's basically saying that the price opened here, came all the way down here, and then the buyer stepped in and pushed it all the way back up to close higher. That's a very bullish signal, and just the opposite for the bearish. Now, similar to those of the torpedoes, they're still going to have long wicks, longer than the actual bodies, right? Longer than the actual bodies. So the tails will be longer than the bodies, but they have a little bit more meat on them than the actual like top and bottom tails, if that makes sense. Still super bullish, still super bearish. Okay, last but not least, our bull 180 candle, and our bear 180 candle. So this one is a pretty powerful candle. Now imagine you have a sellers come in on this red candle, push price way down, and the very next candle, the buyers step in and not only push the price back up, but they push it beyond the opening of the previous candle. They're two large candles. You want these should be larger candles. They're not going to be your smaller body candles like this or like that, They're going to be long candles, almost like elephants, right? But one is taking out the other. That's why I draw this line here, because it's taking out the open of the previous candle. And on the bear side, a bear 180 takes out the open of the green candle with large volume, big red candle. It's called a 180 simply. I mean, it's obvious, right? Bulls were here, and then it did a complete 180 and went the other way, right? Very easy to see, very simple to understand. Now, what we're adding to this is the 200 and the 20 simple moving averages. They can be exponential moving averages if that's what you prefer, but we're just going to stick with simple moving just for make things easier. Now, the first thing we want to notice is the narrow state. Whether the 200 and the 20 are in a narrow state, which we're calling position 1. Position 1 is going to be narrow states. And this is only referring to the 20 and the 200. It has nothing to do with the candles yet. Okay, so we're just trying to recognize, are the 20 and the 200 close together in a narrow state, or are they in position 3, the wide state, when the 20 and 200 are spread apart? There's a big space in between them. Whether it's below, this will be a bearish picture wide state, a bullish picture wide state. This is a bullish picture narrow state. Why am I calling it a bullish picture? Because the 20 is above the 200. And just remember, if you watch my other video, you know what I'm getting at. The 200 is mom and dad. The 20 is the kids. Okay? Just remember that. 200 is the parents. 20 is the kids. When they're close together, call that a narrow state. When the kids are away from the parents, we call that a wide state. Okay, let's get to some examples. It's going to make more sense. So let's run through our candlestick patterns real quick. Boom. Slide 2. Bada bing, bada bang. Elephant, bar, bull, elephant, bar. Look at that candle. See the size of that candle compared to its previous 5 to 7 candles. Way more volume, much higher picture. See that? So we call a bull elephant bar. The very opposite is the bear elephant candle. Same, large size compared to its previous 5 to 7. We're not looking ahead because remember, this hasn't happened yet. So when you see this large volume candle come in compared to its previous 5 to 7 candles, you can call that elephant. Okay, next. Bottoming tail bars. So remember, these bottoming tail bars can be bottom or top, and they could be just the bottom tail bar, top tail bar, or the torpedo. Torpedo, remember, the key is the length of the wick or the tail, right? So we got a bottom tail bar here, long wick, long wick. This would be considered a torpedo. This first one would be considered a torpedo. And these are actually dual bottoming tail bars, so that's a very bullish sign. Very bullish. All right? Bottoming tail bar, topping tail bar. Now this one, you see you get a much smaller body, but look at that large wick. Long wick. Right at the top of a trend. topping tail bar. All right. Next, getting through them, folks. I hope y'all are picking up what I'm putting down. Okay. Bullish 180 candle. Look here. Bears came in, sellers stepped in, and the very next candle, bulls took out the open and went beyond the large volume candle. That is a bullish 180 candle. Opposite, bearish 180 candle. Buyers stepped in, boom, 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 push price up. Very next candle, sellers took it out. Large volume candle. And you see the downside that continued from that. Right? Making sense? Now we get to our narrow states. Our narrow states. Bullish narrow state. See how close the 200, the orange, my blue line is the 200. So you see how close the 200 and the 20 are together? Very close together. Very close. This is a narrow state. And it's a bullish picture because the 20 is above the 200. The 20 is above the 200 SMA. But they're very close together. It's a bullish narrow state. And the very opposite. Oh, don't want to move that. The bear narrow state. So you have the 200 above the 20 SMA, but they're very close together, right? And if you look at the price action in the candles, they're all right around it. Nobody's really separating from anybody. So price is here, it's back down, it's up, and it's back down. It's just chopping around right around these because they're in a narrow state. All right, and this is what we call position one. Position one. When a stock is in a narrow state, the 20 and the 200 are close together or fairly close together. Narrow state. Position one. Okay? Remember that. Position one. Now we get to our wide state. See how much separation we have in between the 200 and the 20 SMA here? Very wide space compared to our narrow state. Y'all see that? That's super important. Super important. I'll get to why. So we have a bull wide state because our 20 is above the 200, but they're fairly separated. There's a big space in between. All right, very opposite. A bear wide state. The 20 is below the 200, and there's a huge space in between the two. When we get to our wide states, ladies and gentlemen, this is position three. Position three. So there's really only two positions that I want you to focus on. If you're new to this, if you are new to the game, this is the only thing that you need to be focused on when you first start looking at charts. Figure out first you got to have the 20 SMA and the 200 SMA plotted on your charts. It's a must. And if you think I'm making all this up, this comes straight from my mentor, Oliver Velez. Go check him out on YouTube if you think I'm making all this up. This is fantastic information for day traders. But you got to know whether your stock is in a narrow state or a wide state. Are the 200 and the 20 close together, or are they spread apart? It's the very first thing you have to be able to answer. Right? Then what we're looking for is things that happen off of these 220 SMA indicators. What do I mean by that? Well, I'm going to tell you. So in this case, look what we have here. We have a green or a bullish candle right off of the 200. This is the very first candle of the day. Okay. And just so you know, all of these screenshots were taken on 2-minute charts. So every one of these charts that you see is a 2-minute chart, but different names. Okay. So that just goes to show you how often this stuff happens, how often these things happen. Right. So let's get back to this. We have a elephant candle right off of the 200 SMA at the beginning of the day. Boom. That's a winning trade. That is a winning trade. No red candles, elephant candle straight off. And the fact that it's coming off of the 200 SMA is very important. The 200 SMA is a very important indicator across the market. A lot of major traders pay attention to the 200 SMA just to know if it's bullish or bearish. So you can quickly look at a chart. As long as your 200 is plotted and the price is above, it's bullish. On this chart, prices are below the 200, bearish. See how easy that is? All right. And why is that important? Because when you have a elephant candle produced off of a 200 SMA, the follow through is very, very high for continuation to the upside. That is what we look for as day traders. Something like this. It's a power move right off of a major indicator. Same thing here, but this one was more off of the 20. It rejected right here off of the 20. So you have a doji candle, the very next candle that comes in. I wouldn't consider this an elephant, but if you combine these two, that's definitely an elephant candle, and it's right off of the 20 SMA, and you see what happens. Boom. I mean, lights out. Lights out. So pay attention to these things. Start looking at charts a little bit differently. Try to spot your bull elephant bars, your bear elephant bars. Test yourself. Pull up a chart like we're going to do here. And the reason why this is so important, and I'll get into this, is because at the beginning of the video, I talked about taking emotion out of trading. So if you're only taking trades where you have a bull elephant bar that's coming off of a 200 or 20 SMA, and that's the only thing you're looking for, you could enter this trade and look where your stop loss will be right here. Let's get into some charts. So y'all know I'm not capping, man. I'm rapping. So this is a Netflix chart. The date doesn't matter. Just know that at the beginning of the day, it looked like this. That's the very first candle of the day, right? Right off of the 200. We're in a, I'll call this a semi-narrow state right at the open because your 200 and your 20 are semi-close. Next candle, elephant candle. So if you enter this trade anywhere in here in this range, you could easily make your stop loss below the event. Boom. Set your stop there right at the bottom of that candle. Or if you want to get a little bit tighter, right there at the body, right there at the bottom of that first candle, you entered this candle. You think you would have made money on this trade? I think so. Did your stop loss get hit? It sure didn't. Looks like a green trade to me. Position 1. So could we name the candle? And this is what's key in this. Being able to name the pattern, name the position, and define your risk all before entering the trade. Okay? Watch this. The same trade right here. First candle of the day. Do we have a candle pattern yet? No. Although this candle at one point was a large green candle right here. This whole candle was full. All the way up to the top. That's why you have that top wick. But the very next candle, elephant bar. Can we name a candlestick pattern? Yes, elephant bar. Can we name the position that it's in? Yes, it's in position 1 because this is a semi-narrow state. We call this narrow. Why do we call this narrow? Because that's wide. Compared to this is wide, this is narrow, right? So we can name it elephant bar. We know the position 1, which is a very powerful position. Very powerful position. Your most powerful moves come from position 1 and position 3, which is why I only mentioned position 1 and position 3 at the beginning of this video. If you know where position 1 is and you know where position 3 is, then you can guess where position 2 is. And your biggest returns on trades are going to come from position 1 and position 3. Hands down. Watch this move. So position 1, elephant candle. Where's my risk? Right at the bottom of the candle. So if this price reverses, if I enter this trade right here on that second candle, on this horizontal line, and it reverses and goes down, then as soon as it gets down here and crosses this, you have to cut the trade. That's where trading discipline comes in. And that's how simple it is. You're no longer thinking. You're no longer in it emotionally. Do these 3 things. Name the pattern, name the position, and name your risk. Watch what happens. You enter the trade there, never touched your stop loss, boom, money time. Now, what happens? It gets to a position 3 state where it is wide. Where it's wide. You see how far apart the 200 and the 20 are? Super wide. And then you get a sell candle, color change, a top wick right here at the top, and then a sell off from position 3. And look at the returns. Back to position 1. Right? So if we only trade from position 1 and position 3, you are lowering your risk significantly and you're taking the guesswork out of trading. Folks, look at this. Let's go to another name. Random names, PLTR, and we'll go to a day on Palantir. First things first. This is the beginning of the day. Beginning of the day. Are we in a position 1 narrow state or position 3 wide state right here? Give you a second. We're in a narrow state. Time's up. We're in a narrow state. It's that easy. Shouldn't take you that long. Narrow state. Now, here's the other caveat. Are we in a bullish picture narrow state or a bearish picture narrow state? Think about that. Bullish picture narrow state. So we already established we're in a narrow state. So is the picture bullish or bearish? How do we tell that? How do we tell that? Where is the 200 and where is the 20 in comparison to the 200? Is it above it or below it? It's below it. So this is a bearish picture narrow state. Immediately you should be thinking puts, not calls, puts. All right, let's see what happens. Position 1, we're looking for a pattern candle. Look what we got here right off of the bat. 2, not 1, but 2. 2. 2. Topping tail bars. Actually 3 if you count this one. So you have 1, 2, 3 topping tail bars from a narrow state. And what did I just say? Guys, I haven't pulled this chart. This is random, right? I'm only going off of the principles. We're in position 1, narrow state. We have the pattern that we named, the top tail bars, which we learned, right? Look like this. Topping tail bar. Look at that. Topping tail bar. And not one, not two, but three of them right off the bat. So you can enter puts as soon as you get a break of this zone right here. Let's see if we get it. Boom, 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 bam. Look at that entry right here. See that entry? This is where you would enter. Where's your stop? Where would your stop loss be? Well, your stop loss, you can put it at the 200 right there, or you can put it at the top of the candle that you entered, which would be right here. All right. Let's see if we make some money. We're in puts right now, not calls, puts. Why? Because we're in a bearish, narrow state. And we have triple, not double, but triple topping tail bars right off the bat. Oh my gosh. Did we make money or what? Did we make money or what? We entered right here. 79.59. It got down to 78. That's over $1. It's over $1. Was it done? Was it done? Nope. So if you didn't take profit anywhere in here, you got another opportunity. Was it done? And it gave you a little bit more. See what I'm saying, folks? Position one. And where do we go from position one? Well, we have to go to position three because we always go from a narrow state to a wide state. That's all the market can do. It doesn't get very wide, but it got wider than the open, right? So we should be out. We should be out of our trades somewhere in here, here, or here for a win. And it never tested our stop loss. So there was no reason to ever panic, even in this. You might have been sitting through, losing some of your gains, but it never got close to your stop loss up here. This is a money-making machine right here. Let's go to another one. Let's go to another ticker. Let's get one that trades Tesla. Tesla's been going crazy. I know we're going to have some freaking narrow state explosions from Tesla to the downside. And here we go right here. Random day. Let's see what we get. First candle. All right. Let's name it. What position are we in? What state are we in? Are we in a wide state or narrow state? Cue the Jeopardy music. We're in a narrow state. It don't take that long. We're in a narrow state. Narrow state. Bullish or bearish picture? Narrow state. Bearish picture. Bearish because the 20 is below the 200. So what are we thinking even before the market opens? We're thinking puts. We're thinking movement of price to the downside. Let's see what happens. Narrow state. First candle. Okay. Not really a whole lot of volume. Got a little topping tail bar, but indecision because we got a bottom wick as well. What I do see is it's rejected right off of the 200. That's key, folks. That's key. Let's see what happens. Oh, elephant candle. Elephant candle. Bullish elephant candle. Now I'm sitting on my hands because now we're conflicted. We're in a bearish, narrow state, and we have a bullish elephant candle. So we have conflicting rules right now. You should not be looking to enter anything. We have conflicting circumstances. See what happens. Oh, okay. Bears came right back in. We're still in a narrow state. And there it is. Proper entry. Really anywhere from this rejection off of the 200. You could enter puts and they would be valid. Okay. So let's say we entered on this candle. After this one, we entered here. So here's our stop loss. See what happens. See, we made money. I mean, might have made a little bit. Has it gotten anywhere near our stop? No. So we're just sitting. We're just sitting. We're just rocking. And boom, you get dumped there. Okay. Boom, dumped there. Profit. It's a winning trade. It's a winning trade, and it wasn't done. It never got close to your stop loss. Your stop loss is way up here. And after all this, you could even adjust it down here if you wanted to. Still nowhere close. And we go from position 1. Where do we go from position 1? Well, we've got to go to 2. And then we've got to get to 3. This would be considered 3 on this day. Or even that. This is 3. But it never got close to your stop. Ladies and gentlemen, you never saw red on this trade. Never. How easy that is. Are y'all picking up what I'm putting down? I'm only looking for the patterns that I can name. I'm only looking for the positions 1 or 3 to make my trades. Position 1, position 3. No 2s. That's for the advance. Position 1, position 3. Bullish picture, bearish picture. Right? Name the pattern. Name the pattern that you see. And it don't have to be a bunch. Just focus on these 3. It's either an elephant candle off of the 200. So it'll look something like this. This is a bullish picture. So what we're going to be looking for is something like this. And something like this. I'm messing this all up. Yeah, I'm doing this on the fly. So I'm human. You know what I'm saying? Mess with your boy. I'm going to get it right, though. Look at this. Bam. Look at this. Bam. Elephant candle right off of the 200. This is a buy. This is bullish. This is bullish. So the same can be in reverse for the bears, right? We can show, we can feel this. And it don't matter if this is green or red. Look at the picture of the candle. You got the 20 below the 200. And then you're looking for an elephant candle to the downside. Elephant candle to the downside for continuation. Make life easier as a trader. Not harder. Make life easier. Elephant candle. Elephant candle off of the 200. Narrow state. So we have our position 1. We have a bullish picture. 20 is above the 200. Elephant candle. So we named it. We named the pattern. We named the position. And we have our risk. Where would our risk be? Right below this candle right here. In this case, it would be right above these candles here. Okay, wide state, wide state. What are we looking for? Now, this is where it gets tricky. When we get into our bullish picture position 3s, this is actually what we're looking for. This is the lower risk play right here. Okay, watch this. Watch this, y'all. Give me a second. Let me work. Let me work here. Watch this. Watch this. Watch this. This is what we're looking for. Elephant candle. Elephant candle. A put play. A put play. Y'all feeling me? Y'all feeling me? Elephant candle from position 3, the wide state. This is your lowest risk trade. It's extended to the top side, so you don't want to be buying calls. You don't want to be buying calls in a wide space up here. This is a no-no. Your lowest risk trade is to the downside. Why? Because we have to go from position 3, a wide state, to a narrow state. Narrow state. See how they're getting closer together? Closer together. We can't. I mean, we can only be in a wide state, especially when you have space in between the 200 and the 20, and then the 20 and the actual price. This trade, you're looking for puts to the downside. There's your risk right at the top. Y'all see that? Make it simple. Make it simple. Look at this. Look at this. This is exactly what I'm talking about. Narrow state, bullish picture, just like in our example here. Narrow state, bullish picture. And we get this run up to where we are now in a wide state. Position 3. What are we looking for? We're not looking for calls. We're looking for puts. The price to come down. So what do we get? Elephant candle. Color takeover. Wide state, position 3. Elephant candle right here to the downside. There's your entry right here. Where's your risk? Right there. Y'all get this? This is so easy. When I learned this and I started looking at charts, and I'm like, the only thing that I'm looking for is position 1 and position 3. Okay, once I have that, are we bearish or are we bullish? Okay, I got that. Now focus on the candlesticks. Find a candle that fits your eye. In this case, we're looking for a top wick, a top tail bar, long top tail bar, or an elephant candle. Elephant candle, because the previous 1, 2, 3, 4, 5 are small elephant candle. And you see what you get. Continuation to the downside, back to a narrow state. You should be taking profits in here. Your stop loss is here. It never got sniffed. Ladies and gentlemen, this is huge. I hope y'all are picking up what I'm putting down. And I feel like I've been dragging this on too long, so I'm going to end this video, but run this one back. Run this one back for yourself and do yourself a favor and go start training your eyes to find these candlestick patterns, these elephant candles, these top and bottom tails, these 180 bull and bearish candles, but pay attention to where they are happening. Narrow state, position 1, wide state, position 3, and start recognizing these patterns. I hope this helps y'all. This has helped me tremendously. Man, talk about taking emotion out. There's no emotion when the market tells you where your stop is, and you're only looking for specific things to happen at specific times in specific places. Pay attention to what I just said. Run it back. Take notes. Take these screenshots. Go win. If you got comments, let me know. If you tested it and it worked, let me know. Oh, man, this is beautiful. To my people in the Discord, you already know. Y'all going to be eating this up. But that's all I got, folks. I'm going to stop dragging it on. Y'all go enjoy yourselves. Enjoy your days. Recognize these patterns. Work on your craft. Get to the money. It's your boy, Train the Trader. I'll holler at y'all next time. Peace.